5. Control assets, classified as current assets.
Money the company expects to receive from a customer after doing part of the work, but can't invoice yet.
If payment is expected within 1 year, it's a current asset.
Under the Revenue Recognition Standard, ASC 606, contract assets represent an entity's right to consideration in exchange for goods or services that the entity has transferred to a customer when that right is conditional on something other than the passage of time.
A contract asset is money the company expects to receive, but
It can't send an invoice yet.
Because some conditions still need to be met, not just waiting for time to pass.
Example.
A company builds a system for a client.
It has done part of the work, but
The contract says the customer only pays after more steps are completed.
so the company has earned something but can't invoice yet. This is a contract asset.
Contract assets may be current assets or non-current assets, or both, depending on the facts and circumstances, such as when receipt of payment is expected based on the agreement with the customer.
If the company expects to get paid within 1 year or 1 operating cycle, it's a current asset.
If payment is expected after a year, it's a non-current asset.
sometimes one contract can have both parts, current and non-current.
Will get payment within 1 year, current asset.
Payment expected after 1 year, non-current asset.
Split payments, part now, part later, part current, part non-current.
Contract assets are explained more deeply in the Revenue Recognition section, ASC 606, but for now,
If the company did the work and expects payment soon, it's a current asset.
6. Short-term notes receivable.
Like receivables, but usually with a written promise to pay within a short time and following regular business terms.
Short-term notes receivable, if they conform generally to normal trade practices and terms within the business.
A short-term note receivable is a written promise from another party, like a customer, to pay the company a certain amount of money within a short time, usually within 1 year.
It is legally binding and may include interest.
To be classified as a current asset, the note must
Short-term,
Payment is expected within 1 year or within the operating cycle.
follows normal trade terms.
The terms, like payment period and interest rate, match usual business practices.
If both conditions are met, the note is classified as a current asset.
Example.
A customer buys equipment and signs a note promising to pay in 90 days. Current asset.
A vendor signs a 6-month note to pay back a short-term loan. Current asset.
A note payable